afternoon. We survived Wednesday, February 11th today. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable in light of your own financial condition. Position disclosure. I got out of IBIT into the close. I kept the Ethereum ETF a little bit. They're trying to put in higher lows, but my IBIT position wasn't that aggressive, and it was a good enough of an intraday move that I just took it. And then I kept a little bit of TSM, which I very rarely trade, but it was like the most extended semiconductor I could find when I called out the semiconductor short earlier in the day today. And I kept a little bit of this XLB as kind of a feeler position as well. I'm really starting to watch XLB, XLI, and XLE for their extension on the daily chart. Even though I've been a super bull on energy, it's starting to go parabolic also. All right, so let's dive in here. A couple key things that I want to discuss. So first of all, the market's flat today. The SPY closed unchanged. Huge intraday movements, it felt like, and it felt like a big down day to me, honestly, but the SPY actually closed unchanged. The Qs are up 0.25%, whereas the IWM is down 0.4. The RSP still finished positive, 0.17. The Dow, which I don't really care about, closed flat-ish. TLT was down 0.5%. The dollar is up 0.1. Gold is up 1%. Silver's up 4.25%. And crypto managed to close red, but well off lows. So it's an interesting little downside candle there, downside tail for IBIT. So a couple things to go over. I've got like 3 things I want to go over and see if I can remember them all. I forget which one I wanted to start with. The back 2 are in my mind. What was the first one I wanted to talk about? Oh yeah, the unemployment number that we had this morning. So interesting move off the unemployment situation that we had this morning, right? So let's go back to the pre-market chart here really quick. So this morning's employment number, non-farm payrolls number, I thought it came out pretty good, to be honest. We beat expectations, and the unemployment rate was down by 0.1% compared to expectations. I think it came in at 4.3% versus 4.3% versus 4.4% expected. The revision was a little bit worse than expected. I don't remember the exact numbers off the top of my head, but it was moderately worse than expectations. If expectations were a negative revision of 800,000, it was like 830, something like that. But I did hear some people talking about million plus negative revisions, which obviously did not occur. So when the number hit, we exploded higher, and to me that makes a lot of sense. I think that it made sense to move higher because the number was better than expected. The revision was a little bit worse than expected, but I felt there was a lot of fear coming into that number. A lot of people thought that things were going to be really, really bad. I kind of did also. I was trying to read between the lines on something that Lutnick said yesterday and something that Trump said pre-market so last night. Reading between the lines, I kind of thought that we were going to get a pretty bad number because we've seen in the past Trump come out and say things before these employment numbers that have been like a pretty good read on what the employment number then actually is. So I do think it's worth it to try to parse through the words a little bit, like the day before, the morning of a big number like that, because it seems like they have those numbers in advance, which would make some sense. And Trump likes to talk, and sometimes he says things that kind of give a little bit of a forewarning, I think, of what the number is going to look like. So I think a lot of people were expecting this number to be really bad. And again, the unemployment number I thought was good. The revision was bad, but not that much worse than expectations. So we deserve to move higher on that, but especially, again, if a lot of people are preparing for something to be really bad and it is just like at expectations, let's say, that makes it extra bullish and extra possible for the market to break higher. So we we immediately, ripped here at 8:30, which makes sense, and we overshot it, so you get the little bit of a pullback here, and around that time is when the market is opening. So this little pullback off the open, I think, is fine because we, at that point, had upside extension from the gap on the small time frame. So pulling back a little bit off of that is going to be just fine. And then the interesting part is that we completely failed the move. So that I always tell everybody, whenever we have these big economic numbers that move the market, that happen pre-market, pay attention to the starting point of that number. As long as we're holding above that starting point, things are generally going to be bullish on that small time frame. But if we lose that, it can become a big problem, because all of a sudden, if you break this low, every single person that bought this market since the 830 number hit, shorts that bought back in, longs that entered positions, they then become out of the money. And then very quickly, this goes from being a pretty bullish situation to, wow, all these people that bought over this period of time are now out of the money. What do people do when they're out of the money? They tend to do one of two things. They either hope or pray that it gets back to their price, which is unlimited risk for zero reward, so don't be one of those people, or they manage risk by stopping themselves out. So when you lose that 830 low, it can really lead to a big down move as the market's saying, hey, we decided that we don't care about that number, or we don't view it as bullish, or what have you, and then the market sells down, and it sells down. I said Lutnick, and then it sells down really hard. So that's exactly what happened here. We got a very, very hard sell, as it looked like it was going to be a failure across the board. It was really the IWM that went first. The IWM was brutal within the sell-off. Like usual, the SPYs are somewhere in the middle, and the Qs, it's also a pretty brutal sell-off, but they were actually acting better, especially compared to the IWM. But all three of those major indexes lost their 830 starting point, and lost it really badly. I mean, this move here was huge. And then we hit finally a point of very extreme extension where I think we did a fantastic job calling out the extension bounce long. I started buying a little bit of TNA for the IWM. I liked the Qs better, and whatever. I should have bought the Qs, except I was short TQQQ, and then I was like, I'm short TQQQ, how can I buy TQQQ? And then I could have bought a different product for different time frames. But instead, I bought the IWM, and that one bounced the worst. It was which makes sense. It was the most relatively weak index. It was the one that let us down. So I started buying it on this bar with the volume pickup, and I just bought it as like a a day. Let me know if I'm back. Let me know if you guys lost me. Can you guys hear me or no? Can you hear me now? 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 Back. Okay. I only am using this internet connection to be able to stream on YouTube for some reason. It's the only one that'll do that, but it does this weird thing where it does these like 3-second drop-offs. So whatever. I'm using a different internet connection throughout the day, but then I can't. If I tried to use that one to stream on YouTube, it doesn't work. So, but they're just these like 3-second drop-offs. So it seems like if we're just patient for 3 seconds, it comes back. Anyway, we called out the RDR here on the 5-minute chart. Particularly, I called it for TQQQ, and it's one of those trades where if you executed it back through the low of the previous 5-minute bar, it was 5-6 cents worth of risk. Just a really good risk reward trade on a small time frame at that point when you're kind of buying it on the way up, and it worked great. All I would really be looking for on this trade is a snap back to the equilibrium zone, but you actually got significantly more than that. You could have stuck with the trade or a percentage of your position for the entirety of the day, because the rest of the trading session was actually relatively boring. A lot of excitement here in the beginning of the day from non-farm payrolls, threw out this 5-minute extension to the downside trade that then snapped back up. But then come 11 a.m., pretty much the entire rest of the day, there was really just nothing going on. It got very, very quiet. So that's one thing I wanted to talk about. Some other just kind of quick, interesting trades today was, again, I called out the semiconductor high here for a short perfectly to give myself a pat on the back, and that trade worked really, really well. I shorted SMH, I shorted SOXL, which I did as a day trade. I shorted TSM, which I never trade TSM, but it was like the most extended on the daily chart of the semiconductor names that I could find. So I hit all three of those at the same time on that call. Another good call that we had today was long on the crypto trade. At the same time that we were buying the market, it just got super extended, and you could even just see where I called it out just based on my own execution. It's just like really, really good spot, obviously. So that was kind of IBIT and Ethereum. So anyway, the first thing I really wanted to talk about was the non-farm payroll number situation. So I did that. The second thing I wanted to talk about, there was three, and I'm trying to remember now what the third one was. It'll hopefully come to me. The second thing I wanted to talk about was dispersion. Again, I know we keep talking about it, but it's worth talking about it more. Charlie McElligott had a great note out this morning, earlier this morning, about dispersion that I got my hands on and was able to read. And there's just a few pieces of information in there that I thought were really interesting that I want to impart on everybody. So, I've been talking about it nonstop. The market has done nothing for a month. Nothing. We have an unchanged S&P for a month, basically a month and a half at this point. You could argue even longer than that, but pretty much exactly unchanged. Yet the average stock in the S&P right now over that same period of time is up or down by more than 10%. So, I mean, that's just an incredible, incredible statistic. The S&P has done nothing for the last 1 month, but the average stock in the S&P is either up or down 10%. And in his note, he just has a list of these different stocks in the S&P showing what percentage they're up and what percentage they're down. And it's exactly what you would expect. For every stock that is up 10%, you can find one stock that's down 10%. Obviously, somewhat market cap related in order to have the S&P be able to do exactly nothing over the period of time that the indexes are doing that. And you can see that, again, in IGV, most notably on the downside, versus I could try to get it tomorrow. I don't have the ability to copy that one, but I can. Sometimes it's in a different research area that I get by the next morning, and sometimes I can copy it from there. So IGV on the downside versus, like, I've been a super bull on energy. And honestly, I still am. But this is starting to break up on already a very accelerated uptrend. It's starting to go parabolic. XLI I mentioned is on the radar for starting to do that as well. I've been trading XLP. This went parabolic. Like, it was like one of the biggest moves in the history of consumer staples to the upside. And this just digested it through time over the course of 4 days as a bull flag, and then broke back up further to new highs today. And then the other one is XLB materials, which this is the one that I started a very tiny small feeler short in today, because it's also at this point starting to go really parabolic. Yet you can have these sectors doing this while the S&P is doing nothing because of you got it. Because of software being beat up, a lot of Mag 7 being beat up, Microsoft being beat up. So you have this huge dispersion. The dispersion is amongst, in terms of how extreme it is right now, and again, this is per the note that I read this morning, it's the 9th highest amount of dispersion, like most extreme, on a 30-year look back. And the really interesting part is that almost every single time it seems like it's preceded, I don't want to say a crash, but very poor market performance over the course of the next like year out, actually. If I remember correctly, the note says that like that same month isn't necessarily the end of the world, but once you get 1 month out is when things start getting bad, and it lasts for like an entire year. That's on the other 8 instances of dispersion getting as extreme as it's gotten now. So it's not necessarily a timing mechanism, but I want to keep that new data point in mind as I keep a couple other data points in mind. One is that this is the midterm year of the presidential cycle. Midterm years within the presidential cycle are typically the lowest performance of that 4-year cycle. And on a smaller time frame, I also want to keep in mind that February is historically the weakest month of the calendar year. And Pat was talking a little bit about the seasonality trend for the month of February when he was on the radio just before. But the week that we're in right now actually tends to be the strongest week within February. And then February 13th is the seasonal top. I said this in a meeting a day or two ago. I don't, take that with a huge asterisk, a huge grain of salt. I don't love the concept of day-to-day seasonality so much as I like the bigger picture seasonality, because every single year is different, every single circumstance is different. Just because something has happened in the past does not mean that it has to happen again in the future. So we need to remember that, and particularly recently, the last like 6 months or so, I think a lot of our kind of typical seasonality trends actually have not played out in the same way that they often do. I remember especially like the September, October months. But it is a little bit interesting that the back half of February in particular is historically weak, right as we're having this dispersion, right as we're having this weird year, right as everything else that's going on is going on. So I want to keep that in the back of my head for sure. And I'm watching this dispersion trade play out, again, looking at XLB now on the one hand and looking at IGV on the other. I'm wondering if software can give a higher low and build out maybe more of a consolidation here that has a better probability to break up a little bit further than just an immediate break of lows. So I'm kind of looking, I think I described this in the morning meeting. So first of all, for this week, I said on Monday morning, I was like, I'm expecting just chop for this week at the index level, so be a little bit careful. Now, bigger picture, really what I'm looking for is kind of one of two things happening. Either one is some degree of mean reversion on just how extreme some of this dispersion has gotten, which means that the dispersion can still be very wide. It just reverses itself, where you get a bigger bounce in IGV, you probably get a bigger bounce in crypto, and again, Bitcoin potentially giving a higher low today after this kind of more capitulatory event. And at the same time, you get a pullback in some of the other sectors that are starting to go parabolic. That's one thing that I'm kind of looking for. But the other thing that I'm looking for, given everything else that we just discussed, is signals of a more broader sell-off coming into play. And what a broader sell-off coming into play, I think, will look like is correlations increasing. I keep saying this, but I'm looking for these clues. They may not happen, but show me XLB, XLE, XLP, QQQ, and IGV all selling together at once, correlations increasing after this massive amount of dispersion that we're seeing being at these highs. That, I think, is a potential big signal that you got to watch out below. Get the short. All right, I'm back there. Can you guys hear me? Can you hear me now? Does anyone remember those commercials? Can you hear me now? Can you hear me now? Okay. Cool. So basically what I was going to say is if you lose these lows, watch out. Like that's also going to be the technical signal. And then the only other thing that I would mention about how bullish this market looks right now. Oh, that just dropped again? Dude, this is ridiculous. Oh my God, this is ridiculous. Can you? I'm good. I'm still here. All right. The only other thing. Shit. What was I about to say? Oh, the only other thing that I would keep in mind about how bullish this market looks right now. The only other thing that I would keep in mind about it is, because I know that you might be able to hear me, is just how bullish the market looked last February right before the sell-off. And I don't have, to be fair, I don't have the same conviction right now in us selling down as I did then. I had a lot of conviction literally this time a year ago. I remember February 19th. What's today's date? February 11th? I remember February 19th a year ago when the market broke out of a pattern that looks remarkably similar to the current pattern. Sideways for a few months, beautiful digestion, just beginning to break higher. And then I remember on the day that we actually broke higher, doing like this meeting and saying, guys, I'm super bearish. Everything is lined up now. The when crash is all lined up. I think it's ready to come together. I wasn't expecting this, because I wasn't expecting, never mind, I'm not even going to say it. But I was expecting at least this, like this first leg of this sell-off. I was expecting. So I don't have that same conviction that I have now, but we need to be on watch for it because it's a possibility right now. It's really becoming a possibility right now. So that was kind of the last point that I wanted to make. So we talked about the unemployment number. We talked about the dispersion factor. There was a third thing I wanted to talk about, and I don't remember what it was. So I will end my side there and turn it over to you guys for questions until and unless that other thing comes back to my brain. All right. First thing I'm seeing here on the YouTube is from Cody. I had Merck, Coke, Walmart on my list for a daily pivot play. Didn't end up getting in because I found the entry off the open tricky. Any way that you see how I could have gotten in? Sure. So you gotta be kidding me, man. Was this the 5th time? Dude. You guys got me? Okay. I just can't get quotes to come up. This is just insanity. I can't get quotes to come up. I'm gonna put your question on hold, Cody, until I can try to get quotes to come up. Let me read Robert's question. Last week we talked about analyzing each sector. Since then, I include sector analysis into my morning game plan. What is your feedback on the following thought process? I had SMH as the strongest sector today. Weak market at the open took SMH down as well. And once we find buyers for the market, then circle back to focus on SMH, SOXL, and individual names from the sector to look for intraday plays. Would you say this style of trading gives you a better edge once you recognize where money flows? What you're describing is relative strength. As a general rule, you're better off being long relative strength, and you're better off being short relative weakness, which is why if you circle back to, there we go, I got quotes again. If you circle back to my IWM trade from this morning, maybe I don't have quotes. I'm about to lose my mind. If you circle back to being long IWM, I don't even know if you guys can hear me, versus being long the Qs this morning, I said the Qs were the better trade because that's where the relative strength was. So, buying relative strength is always the way to go. However, in a bigger market event like we had today, sometimes when you get to the other side of that sell-off, the things that were relatively strong prior to it may not be relatively strong still. So you need to make sure that what was relatively strong is still actually showing that relative strength. So I like the general thought process, Robert, but you just want to make sure that, again, what was relatively strong stays relatively strong. I got no quotes again, so I'm going to skip Cody's question a little bit further for the moment, but I want to get back to you if I can from Peter. Is that possibility of a repeat of last February largely technical for now, or are there other factors that you're looking at? Sure, yeah, I'm always looking at our market dynamic factors and seasonality factors. So it's technical if it breaks the key levels. It's seasonal because of where we are within the year and the month, and it's also from a market dynamic perspective. We're paying attention to the CTAs and the vol control funds and the systematics and how long they are and how how much selling could build into the feedback cycle of selling if they ever were to actually break. And we did get a little bit of an unwinding in the CTAs just the other day. I don't think that we're like February a year ago we were at the 99th percentile long in everything, like long short funds, the systematics, everything. We don't appear to me to be as long as we were February a year ago, but we are long enough, the systematics and everybody else, that if you see correlations increase, you could definitely see a pretty big unwinding event. So I think that that's in place as well. And then the final part is really the skew. And, we saw a lot of protectionist put buyers start coming to the market recently. And, we may be there now. We may be, pretty close to the when crash. So I like to look at all of those things combined and even throw some fundamentals in there. Fundamentally, for what it's worth, we're honestly still a little bit expensive here too. So it's all those things at once. From Ethan, I've been struggling to keep my worst losing days meaningfully smaller. Let me just see if I can restart my light speed really quick. This blank screen's annoying me. Cool, we're back. I just sold some Ethereum. I guess it was a minute or two ago. From Ethan, I've been struggling to keep my worst losing days meaningfully smaller than my best winning days. With a smaller account, my limit down and lockout are tight, so I can hit limit down in just a few trades. I think that's okay. When I get close to that level, I've noticed I actually become less risk averse and I start taking lower quality setups and attempt to make losses back instead of protecting capital. Yeah, you don't want to do that. I think the core issue is accepting losses and accepting the day is done once I'm down. What I'm trying to improve is not adding risk when I'm already in a drawdown. What concrete rules or mental framework have you used to enforce discipline near limit down, especially with a smaller account, so that losing days stay small and don't turn into forced low quality trades? Yeah, so you're already winning the battle by the fact that you're able to recognize that and then you've analyzed that. So you're already winning the battle towards improving on this issue that you are needing to work through. And what you're describing, by the way, is very normal. This is the normal part of human psychology, is that we don't, if you've ever played a sport ever in your life, you like to win, right? It's how we're conditioned. And it's very difficult in any moment to be like, all right, today's my day. I lost the game today. But it's why the big picture is so important. Yet it's so hard to keep in mind what the big picture of this business is for you in the day-to-day moments. You're looking at the screen. It's in front of you. You want to keep trading. You want to fight back. Those are all natural and normal instincts, and those natural normal instincts and recency biases, they lead us to doing things that actually don't benefit us in the long term. So it's just really, really hard to be able to do things that defy kind of the natural psychology of a human being for the bigger, better picture of yourself overall. So what you're describing is normal, and it's difficult to work through. Again, like I said before, you're already winning the battle by recognizing it. One of the biggest things that you need to do is just reinforce it now. You need to constantly reinforce what the right thing is to do in those situations, to step away, to be more risk averse, to not fight back. And the way that you reinforce that is by keeping really good journals, rereading those journals in the morning. You know, if you made that mistake today, you reread it tomorrow morning so that it's reinforced in your head as the market's opening, before you're placing your first trade, that you need to not make that mistake again today as you made it yesterday. So that's kind of the biggest thing. And then honestly, you know, one of the things that took me the longest in my career to be able to get to, and I am at this point now, is to kind of recognize that for me at least, it might not always be this way for everybody, because you have to respect your max losses. My P&L doesn't matter to me. Outside of respecting my maximum loss, my P&L does not matter to me, genuinely. So whatever your maximum loss is, let's just say down $500. It's usually the number I like to use. It's simple. It's small. If you are anywhere that's not down $500, you need to trade in such a way where the P&L, it doesn't matter. You're process focused. Because I think we just talked about this in an afternoon meeting recently. The way to be successful in trading is you can't just be like, my goal is to be profitable, therefore I am profitable. It is, you know, my goal is to be profitable, okay, fine, but it's the process that actually gets me there, so I need to be 100% focused on the process. And process then turns back to game planning. And game planning is about then having the discipline to follow those game plans. So, you know, I would say for me at this point in my career, because I'm so focused on the game plan for every trade that I'm in, I don't care about my P&L at all. You know, sometimes if it's really big in one direction or the other, it impacts me a little bit. But otherwise, I do not care. I do not care. It's just I need to keep focusing on the process and just doing the right thing and having my orders in the right places and just process. So I hope that helps. Let me go back to Cody's question now that I restarted my light speed. So he was saying that he wanted to get long some of these more consumer staple type stocks, which makes sense if you look at this XLP, bull flag, ADMA catch up. So he was looking at Coke off the pivot low. This had traded down on earnings yesterday. He was looking at Walmart, which is a little bit more similar to the XLP, down into the ADMA to see if it continues higher. And Merck, also a similar chart. Got super extended, technical pullback to the ADMA, created the pivot low, and then you're looking for the long. So he did the big picture research and said, hey, big picture, I want to be long this XLP bull flag via these 3 stocks. And then it always comes down to smaller picture execution. This Merck is tough. This is the first one I typed up. There's 2 things that are immediately standing out to me. I don't necessarily think that either of them are easy. Probably the first one's the easier one. You want it to be long off of yesterday's pivot low. It's selling down right in the beginning of the day. You're just piecing in versus yesterday's pivot low as it moves against you. That's doable. The other thing that I'm kind of seeing is maybe a buy here when it broke this like opening range from the first 30 minutes back through 117.40. For me personally, it's a little bit trickier of a trade. But I think it would be very possible if you wanted to be long off the daily chart pivot low and the stock pulled back in the beginning of the day closer to it, that you could have just been buying versus that daily chart pivot low. Coke, I think, is going to be the most difficult one because it was on earnings yesterday. So that daily chart pivot low from yesterday is going to be significantly further away. So hard to just be long here right in the beginning of the day versus that low. I don't really see a way to get into this. Maybe somewhat similar to what I said on the smaller time frame execution, just kind of back breaking above this range here to the upside. I find that again tricky personally. I don't know if I'd be able to get that. So Coke, I don't. Merck, I think I could definitely be long just versus yesterday's low off the opening pullback. Coke seems significantly more difficult to me. And then Walmart, similar but different with Merck. It opened so close still to yesterday's low. That's tough because it closed on lows though. Like this easily could have today broken that low, then snap back. So you almost could have bought this as like, it's not technically an RDR, but for lack of a better term, like an RDR back through yesterday's low. That could have been a game plan. If that was the game plan to capture the pivot low, then the way that it traded today means that you're not going to get any stock in this either. Or you're just buying some versus yesterday's low, but I don't love that. So again, if you're asking me how could I have executed in the small time frame versus the big time frame, Merck seems most doable to me. Walmart, you could have had a good plan to buy back through yesterday's low, but it never triggered and you wouldn't have gotten anything. And Coke seems like it's the most difficult to me of the three. So I hope that helps a little bit. Sometimes we do all the research based on the big picture, and the small picture just doesn't give it to us, and that's fine. That was like me with SanDisk yesterday. Like I really liked that SanDisk short yesterday. It worked out really well, and I just was looking at something else and fumbled the execution, and then it was gone. It's a tricky name to execute also. Varun on Fastly. Fastly or Fastenal? You're always giving me these weird symbols that aren't real. Fast looks good. So, I don't know. From Invescro, how to improve my expertise in identifying a symbol. Oh, FSLY. Oh, wow. What's moving this? Is this earnings after hours? Yeah, it looks like. I haven't looked at it. Fastly, FSLY. Invescro, how to improve my expertise in identifying a symbol, when to enter, when to exit, and what stop loss. I am struggling on these. How can I read charts? Suggest any good reading or videos to watch? Yeah, so I would definitely suggest that you watch my training